Welcome everyone to the Kendall Report. I'm Bob Kendall. This is a special Sunday night pre-recorded version of our daily stream that I do. So I'm going to try to condense all of the videos down in the days to come so we can get through this information much quicker. Let's get into tonight's video. We've got a big week ahead of us. Guess what? The inflation monster is not gone yet. Excuse me, on Tuesday, we're going to have the PPI come out. It's expected to show 0.5, just like the CPI, but the CPI came in at 0.6, and they revised the previous month up as well, and we saw a 7.5% year-over-year number. Now, I want you to think about something. If you know the rule of 72, if you divide the inflation rate into the rule of 72, you divide it into 72, you will get 9.6 years from now, your money will be zero. If you put no more money in, everything's going to dissipate to zero if you keep your savings. So this is a big, big issue. And I believe the Fed sees this issue coming around, and they're going to be very aggressive, maybe to the point of panicking. A lot of folks are saying they're going to back off, they're going to change everything. No, they're not. They're going to stay forward with this. And the good thing is the markets have already taken care of a lot of the market's movement for them. They've actually got to the point of getting it over 2%. So there's already a 0.25% increase. All they have to do is raise a quarter and they're in line. The question is, will they do an intra-meeting action? Otherwise, will they step up and do something before the next meeting? That's very possible. The one thing you have to note, though, they're still adding to the balance sheet as we speak. This is absolutely lunacy. We have amateurs running the Federal Reserve. We have amateurs running the government. We have a senile old man that has no clue what he's doing. And now they're trying to launch wars. And it's just getting crazy here. Maybe they want all this stuff to happen, and I can't tell you. I don't want to get into a conspiracy. Sticking to the markets, and what we're seeing, though, markets are starting to really focus in on a number of factors that I think are going to be important as we go forward. And the primary one will be the inflation. Number two will be this situation in the Ukraine. I have to tell you a very quick story, though. Back in 1991, when the wall was coming down, the Soviet Union was collapsing, all that happened. We were on the floor at the exchange. The company I worked for, the hedge fund I worked for, was one of the largest hedge funds on the Pacific Options Exchange. And I realized we were a small exchange, but the largest trader on there was one of the partners. And I was sitting there talking to him, and the Dow Jones was down 100 points. And believe me, in 1991, that was a huge move, almost like 1,000 points today. What does the fall of the Soviet Union have to do with corporate earnings in America? And he looked at me and he said, I guess it doesn't, does it? I go, no, I don't think so. And our fund, we went out and started buying the dip that day. Maybe that was one of the first buy the dip scenarios. It was obvious that what the markets were responding to had nothing to do with real economics or anything that was going to affect the markets themselves. So the markets rebounded, and I think the same thing here. We'll see what kind of rhetoric gets up and invade the Ukraine. Listen, they don't care about sanctions. That's all they're throwing out there. Why do you think they just made these deals with China? They've got everything they need. China makes everything in the world. They don't need the United States for what? They don't need the US dollar. They are hooked up with China, and they just don't care. Whether they invade or they don't invade, it's not going to matter. There is no rebelling against them or stopping them from doing what they're going to do. So it's going to get really interesting. Markets are likely to get emotional if it does happen. Not sure what's going to happen, not predicting anything. This is geopolitical risk I'm talking about. This has nothing to do with any kind of political bias or anything like that. It's strictly talking about geopolitical risks that exist. We're also seeing things in the Middle East start to heat up again, especially with the situation with Iran getting access to lots of money and the ability to start to enrich more plutonium. It's just getting scarier as the day goes on. I talked to you about this some months ago, that I believe what's really going on in the markets is a loss of confidence. And that's worse than any of these events I just talked about. If you look at what's going on here in the US, you look at what's going on with the blockade, basically I'm calling it, in Canada, this is a big event, and I believe this is going to continue to dominate the news as far as that goes. And if we do get any type of activity in with the truckers here in the United States, it could even get uglier from that standpoint. So lots of disruptions. I mentioned this in the stream the other night that I don't think a lot of folks have seen economic disruptions through strikes before, but we're likely to see something significant here. I don't know what's going to happen, but the markets are getting very concerned, and it's starting to show up in the technicals, which I'll go through here in a few minutes. Let's take a look back on last week just for a minute. We got the S&P down 1.8% on the week. Year to date now 7.3% negative. NASDAQ down 2.2%. negative 11.8, and the Russell was actually up 1.4, and we saw it is down on the year 9.6%. So all of a sudden, we're seeing the Russell come back in just a little bit, and that's been a stronger pattern that I've talked about in detail. Let's take a look at some of the economics that are coming out this week. I mentioned PPI on Tuesday. That's going to be the big event. Retail sales on Wednesday expected to show a 2.3% increase. We're looking at industrial production up 0.5. Also Wednesday, capacity of utilization to come in at 76.9. These aren't really that material, but they do incrementally affect the sentiment as we go forward. On Thursday, we have housing starts. We've got the coming in at 1.72, the permits at 1.77 million, the claims at 2.18 thousand, and then continuing claims are at 1.162 million, and that number's just kind of been waffling above 1.6. If it dropped below 1.6, maybe that would mean something, but I don't think anybody's really focused on those numbers right now. On Friday, we have existing home sales coming out. I don't see that many of those things being really material, but this is what's going on. As far as earnings go this week, we have quite a few earnings coming out. We've got about just around 600 earnings coming out, 55 on Monday, Tuesday 162, on Wednesday 166. We've got mainly chip companies coming out. We got the semiconductors, and we also have Barrick Gold for what that's worth for you that are following the gold. On Thursday, we have Walmart. That's before the market opens, so that will be impactful, along with the numbers I talked about on housing starts and the claims and all that. On Friday, we have John Deere coming out. That's usually something that a lot of folks are watching as far as economic activity. So it's looking a little bit sketchy as far as things go. As we come in, getting ready to go through the database itself, I think it's interesting just to note that we're seeing still a negative rotation. There's not enough traction to move the markets off of this range, and there's a lot of negative input coming in at this time. The daily output right now, well, I'll go to the weekly here in just a minute. What we're looking at here is that we did have 3,415 sell orders come in with 215 buys. So big negative rotation here, and we're back to 32.96. We were just a touch over 40% on Friday, so this is backing up. We can't get above that 42% number on the weekly. As we go and take a look at that number, what you'll see here is where it's 17.34. There was actually a slight uptick, but this is pretty typical when we're looking at the database from this viewpoint, because we're looking at the material change in here would have to get well over 42%, and we saw a slight bias to the upside, 557 versus 236 buys and sells. So as we look at the database itself, nothing really happened. We're still seeing a churning on the short-term database, a lot of changes going on there, and the intermediate database is not going to get to anywhere where we're likely to get any type of traction. Let's go ahead and dig into the technicals here. So as we look at the E-minis here, this is not a current quote. This is before the opening on Sunday, so I'm getting this done early for everybody who wants to watch the Super Bowl. But this is a big event. We saw on Friday mass liquidation again on a Friday. We saw the markets close down below some key levels. We closed below the simple 200-day moving average. Everything is starting to confirm some downside. I went through a lot of details on the video on Friday, so you can go back and watch that. But the projections are, there's two things that you need to watch for here on the S&P, and I've been mentioning these numbers for multiple sessions now. The first is the 43.58 level. That is the pivot in here. If we get a break below 43.58, we closed at 44.18 on Friday. That was the futures close. That was up a bit from the cash close. But we're looking at, if that is penetrated, then that suggests we're going to retest the 42.12 lows that were made 3 weeks ago, 3 Mondays ago. And if that number is taken out, then the next downward target would be where I've got my cursor here right now, down to these Fibonacci targets, which suggest 40.59, 38.58 is all the ones I'll talk about. The extreme is 37.33. So we're looking at challenging the 4,000 level is what we're looking at. And this is a simple Fibonacci projection off of this pattern. This over here, what we're looking at is a right shoulder pattern, and this is pretty devastating from that standpoint. Let's go over and look at the weekly. Weekly, we close under the 40 week. The PPMs are negative on PPM 1 at a minus 0.26. That is trend level down. That suggests 45.82 is a massive ceiling on this market. Even if any type of rally was tried, that's going to be a problem. We look into the grid coming in this week. That's going to be suggesting a minimum of, this is a weekly grid, 43.61 would be S1, R1 44.58, so at least an R1, S1. If we get down to S2, then we're going to be challenging that 43.58 number. Let me go back just a step here and let's talk about the expectations for Monday, and those are going to be R1 44.33 with S2 43.59. That's right at that 43.58 pivot number. The pivots intraday will be 43.85. If that's taken out, then look for that next level S2. Next market I'll look at is the NASDAQ. NASDAQ has the same pattern. We have a similar calculation going on. We saw a massive sell-off in the last 2 sessions there. So let's take a look and just see exactly where this target is suggesting. 12,956 minimum target, but similar to the numbers that I talked about in the S&P, there are 2 numbers to watch here. 13,926 is a pivot, then 15,570. If that's taken out, then you're looking at 12,096. Let me repeat those numbers. These numbers right here are for 13,926 and 13,570. Break of 570 would take us and suggest that we get down to these 12,000 numbers. Just looking at the expectation, R1 14,347, S2 14,015. So we're still looking at downside objectives. You can see the market grid has turned down substantially. PPM1 has cut through its first, second derivative. All the PPMs are deteriorating here. On the weekly, same pattern here. We're looking at minimum S2 17,785, R1 14,455. We're in serious downtrends on PPM 1 and 2, suggesting there is a ceiling in this market around last week's high, 15,068. Probabilities right now are less than about 20% getting back above those levels at this time. The Russell is in a similar pattern. This is the weekly chart I've got up here. The only thing that's happening here, as I mentioned, it's got a slightly stronger formation here. There's one of those bubble bottoms. Is it possible that the Russell could save the markets, that people start looking at small caps to get involved in there? Let's take a look. So PPM 1 is turning up, PPM 2 is flat. We actually are still at a minus 0.61, so that suggests that the 10-pair moving average is dropping substantially right now, about 13 handles per week. This is the weekly, looking at a move down to at least 2100 being the top. We're at 2030. There are no current Fibonacci downsides. The real next number that's out there at the moment on a weekly would be 200 week, which is way down at 1750. And it's interesting how we have just an opposite formation. This is the first time I've seen where we're not seeing the small caps and the NASDAQ be in sync. So we'll be watching that over the next several sessions. Just come up quickly at the mid-session roll here. As usual, I'm going to go through the treasuries, which were lots of action there and things to look forward as we come into PPI and all of that. And then we'll be looking at crude oil, gold, and Bitcoin. So let's go ahead and finish this broadcast. Starting with the 10-year weekly, we did trade up substantially above 2%. We're back under 2%. We traded up to 206.30. The market grid last week, the extreme was 209.20. R3 was 205.40. So we traded between R3, RXT, and I still think there's some downward slope possibility coming back to around the 184 level. There's still some pressure to the downside. Even though we were able to spike up, we did almost hit the Fibonacci projection that was above the market here at 212. I've been talking about that. The 206 print is close, but there's still a lot of power in this market. We're looking at the PPMs here from the standpoint of the uptrend. We're looking at PPM 1 on a weekly basis, 3.77, PPM 2, 1.77, and 0.63. So this is a big time angle of attack. We're about 2 weeks away from the 10-week crossing over the 200-week. This will be a substantial situation as we come into this pattern. Going to the daily pattern, we did get the RTX sell signal when we closed at 205 the other day. We did see it come in. Now we've got just the opposite. We've got 196.8 is the RTX on. So we now have, STX. So we now have an STX buy. So we should stabilize here. We should remain above 10-pair moving average around 206. Let's take a look at the yield curve here, and we continue to see deterioration here. We're down to 0.38. I'm going to move this over to a daily format just so you can see the day-to-day. You can see we did uptick a little bit. We printed the other day down to 0.365. So as I've talked a lot about on this channel, I've talked about this being a key number at 0.20. We're above there, but this yield curve collapsing is very substantial. So the next market we'll cover is crude oil, and crude oil also got this big spike the other day. We saw this move up and we closed. RTX was 92.57. We closed 93.10. So we have an RTX sell signal, looking for some sideways action for a couple of days on the daily. PPMs have turned very positive. This is a very strong configuration from that standpoint. We look at PPM1 turning through its first, second derivative, PPM2. This is a very substantial pattern that is forming. And what we're seeing here from the standpoint of the weekly, we go to the weekly grid, we're looking at R1 being 94.68, R2 95.46. I've been talking a lot about these upward objectives that we're having, and we did see a narrowing of the objective. 95.50 is the target 2 here, 101.28 is target 3. So there's been some fine tuning of the Fibonacci projections in this pattern, but PPMs are just off the map bullish. As we look at the gold market, what we're seeing here is the pattern is finally starting to break out. We got that cycle low 2 weeks ago. It's starting to accelerate. We're seeing the PPMs all move much higher here, and they're moving at 0.23, 0.31. So we're actually in trend mode on the weekly gold right now, which is amazing because I've been talking about this sideways. This is a big deal. We're now looking at closing above the 1856 level. I've been talking about that level, and then moving up to the potential going to 1897 is one of the higher end of the market grid for this week. We're looking at 1884 to 1897 is RXT. We also have Fibonacci projections in this pattern right now, 1913, and then a much higher number at 1974. So let's not get away too far ahead of this market, but we're definitely starting to look like market's going to start to the 84 level that we had back on November 19th of 2021. The final market I look at tonight is Bitcoin. Bitcoin is just waffling in a sideways mode. We did manage on a weekly basis to print up to the 40-period moving average, 45,732. The high was 45,826, almost exact hit there on that level. That was an R1 value or just above it between R1, R2. And on the downside, we're looking at S1. This number will update later, so we'll have this update tomorrow night. I'll be able to talk about the new grid as we come in this week. But a couple of things I've mentioned here. PPM1 is crossing through its second derivative. PPM2 is poised, and 3. So another week, maybe 2, if we can stay above 40,000 and just go sideways here, we're likely to see this pattern really unfold in a big way to the upside, and at least getting up to the point of going toward the 45 to 50 level and setting up a much larger pattern. Looking at the daily pattern, we're seeing it just drift down back into the moving average. PPM1 is up at a 0.93, and that's positive enough to hold this market right around this 41.7 level. So far, we've been down to 41,893, so it's held so far. We're going to have to break back above around 43.2 to make this thing work. R2 is 43,400. Above that, then all you're doing is going to trade back into that congestion. Well, folks, this will complete the broadcast for tonight. I want to thank everybody for watching this channel. Thank you for everybody that's subscribed. Make sure you subscribe and like these videos, and I will see you on Monday night. It's possible I'll continue to do these uploads rather than the way that I've been doing them in the past. Have a great evening. Have a good day trading on Monday. Those of you in our live trading room, see you at 1 o'clock. Have a great day.